we are going to see chapter number 2, Depreciation Account of Standard 11 Commerce Subject Account. Today again we are going to see chapter number 2, and here there are two machines. From that first machine is going to be sold at a loss of 20%. Let's see illustration number 15. Illustration number 15. Saxon Limited has purchased one machine on 1/4/12 for 74,000 and its installation cost is 6,000. So here 54 plus 74 plus 6, so it will be 80,000. And second machine was purchased on 1/10/13, that is 1.5 year later on first machine. So that was purchased for 68,000 and installation charges was 4,000. So total of that will be 72,000. Company provide depreciation 10% every year under reducing balance method. So here reducing balance method, and in the reducing balance method we are providing depreciation on balance of every year. So that we will do. And first machine was sold at 20% loss of book value on 31st 3/15. So on 31st 3/15 first machine is going to be sold, and for that here they are asking us to prepare machine account for 3 years and pass the journal entry for the first year only. So here we have to pass the journal entry for the first year only, and we have to prepare the machine account. So for that let's prepare the working note. So here illustration number 15, working note. And here particular first machine and the second machine, then total depreciation. Okay, now let's say first machine is purchased on 1/4/12. First machine purchased, and for that let's say the cost price, and for the cost price 74,000 is purchase price plus 6,000 is installation expense. So total of that will be 80,000, and 80,000 is the cost price. Now at the end of the first year we are going to provide the depreciation, and that depreciation will be on, as the first year will be ending on 31st 3/13, and depreciation will be under reducing balance method. 10% of 80,000 will be 80,000. So book value after first year will be 72,000. Here second machine is not there, so total depreciation of the first year will be 8,000. Now this is the book value as on 31st 3/13. Now the second machine is purchased after the 6 months of this, so that is on 1/10/13. Second machine purchase, and cost price of that machine will be 68 plus 4, 68,000 plus 4,000, so that will be 72,000. Now at the end of the second year, that is going to be end on 31st 3/14, and depreciation for that. So here depreciation for the first machine, as it is used for whole year, so that will be 7,200, and depreciation for the second machine that we have to calculate, as it is used for 6 months only. So for that we have to calculate 72,000, 10%, that will be 7,200, and it is used for 6 months only. So we have to provide depreciation for 6 months, and that depreciation will be 3,600. So that is, now from 72,000 if we are going to deduct 7,200, that will be 64,800, and here 68,400, and again total of this depreciation will be, total of that depreciation will be 10,800. So this is the total depreciations for the second year. Now we are going to use both the machine for the third year. So here this is the book value. As on 31st 3/14, and here now we have to calculate again depreciation on 31st 3/15. Depreciation will be at the rate of 10%. That will be here, as it is reducing balance method, we have to calculate depreciation on the balance, and that will be 10% of 64,800 will be 6,480, and here it will be 6,840. Now let's deduct this. So here if we are going to deduct, it will be 58,320, and here it will be 61,560. So this is the book value as on 31st 3/15, and total depreciation of this will be 13,320, and here this is the book value as on 31st 3/15. Now here first machine we are going to sold, and that we will sold at 20% loss of book value. So 20% loss of this will be minus 20% loss, and that will be 58,320, and 20% of that will be 11,664. And here the balancing amount will be 46,656. So this is the selling price of first machine, and this will be written in the bank account, and this is the loss. So this will be debited to profit and loss account. So students, this is how we are supposed to calculate depreciation as well as loss. You may note down this, then we are going to prepare journal entry as well as machine account. Let's prepare the journal entry for first year. Here they are asking us to prepare journal entry for the first year, and in the first year we have purchased the first machine, and for that machine is coming in the business. So machine account debit to bank to cash. Let's pass that journal entry. So here 11412 machine account debit bank account to cash account. Here 74,000 and 6,000, and total amount is 80,000, being machine purchase for rupees 74,000, and installation expense paid rupees 6,000. Now let's pass the second journal entry, that will be at the end of the first year, and that is for charging depreciation. on 31st 3/30 depreciation account debit to machine account, and here the depreciation is 8,000 that we already calculated in the working note. Being depreciation charge. Depreciation is charged on machine for first year. Here again, to close the depreciation account, the same day we are going to pass the another journal entry that will be profit and loss account debit to depreciation. Here, amount will be same 8,000. Being depreciation account to close. And transfer to profit and loss account for that. So here the total of first year will be 96,000. 96,000 total. So this is the journal entry for the first year. Now let's prepare machine account. So for preparing machine account, as we know, when we are purchasing machine, that time machine account supposed to be debited. So here in the machine account, very first thing we are going to write on 1/4/12 to bank account to cash account. Here 74,000 and 6,000. Again, at the end of the first year, we are going to credit in the depreciation. So here, journal entry is depreciation account debit to machine account. So on the credit side of machine account, we'll write on 31st 3/30 by depreciation account, and the amount will be 8,000. So here, to close the machine account for the first year, we are going to find out the balance of the machine account. That will be 72,000. Here on 31st 3/30 by balance, carry it down. The same balance we are going to carry forward to the next year, and that will be on 1/4/30, and the amount will be the balance brought down, and that will be 72,000. Here again, in the second year we have purchased the second machine on 1/10/13. So that we will write to bank account on 1/10/13 to cash account. So here it will be 68,000 and 4,000. So that will be again 72,000. Now at the end of the second year, that is on 31st 3/40, we are going to provide the depreciation, and we have already calculated the depreciation for the first machine as well as second machine, and that is by depreciation account and the amount of depreciation depreciation will be 7,200 plus 3,600. So total amount will be 10,800. Now we have to find out the balance of the machine account at the end of the second year. So for that, 72,000, 68,000 and 4,000, that will be 1,44,000. From this 1,44,000, if we are going to deduct 10,800, so balance will be 1,33,200. Here 31st 340 by balance carried down. So this is the balance at the end of the second year. Now let's find out the next year. So next year on 1/4/14 to balance brought down, and here the amount of the balance is 1,33,200. Now at the end of the third year, that is on 31st 3/15 by depreciation account, and that will be the total depreciation will be for the first machine 6,480 plus 6,840. So total amount of depreciation will be 13,320. Now after the providing depreciation, first machine is sold, and for that we have received money in the bank is on 31st 3/15 by bank account, and the amount that we have received is 46,656, and the balancing amount is the loss, that is 20%. So here on the same day 31st 3/15 by profit and loss account, here it is a loss. So 11,664. So this is the loss. Now let's find out the balance of the machine account. So for that, 1,33,200, that amount we are going to take. This side 1,33,200, and on the same day 31st 3/15 by balance carried down, and the amount of the balance is, if we are going to deduct from 1,33,200, 13,320, 46,656, 11,664. So balancing amount will be 61,560. So this is the balance of machine account as on 31st 3/15. Students, you may note down this in your notebook. Thank you for watching this video.